Welcome to this Windstream Enterprise webinar on financial services sector cybersecurity. My name is Bucky Porter. I'm a financial services industry analyst with Windstream Enterprise, and I will be your host. Prior to joining Windstream Enterprise, I spent 25 years in the banking industry in roles ranging from sales director for a $15 billion regional bank to chief lending officer for a $200 million community bank. Security issues in the banking and credit union worlds are at the forefront of every chief information and chief technology officer's minds. Our financial services customers are consistently telling us that security of their network infrastructure is one of the top priorities and reasons for many sleepless nights. In addition to network and voice services, Windstream can also assess and deliver security recommendations and solutions. To provide such solutions, Windstream Enterprises partners with Foresite through our professional services division. Foresite services perfectly complement Windstream services by identifying key risk areas and addressing gaps that can leave businesses vulnerable to an incident. The majority of incidents are not sophisticated attacks that target a business, but they're automated code that looks for known vulnerabilities that can be easily exploited. Automated attacks are preventable with good cyber hygiene, which is why Windstream is committed to bringing these services to you through our partnership with Foresite. Joining me today as the subject matter expert for our webinar is Tracy Fox. Tracy is the National Director of Partner Enablement with Foresite and has been consulting in technology since the 80s. She has focused on cybersecurity and compliance at Foresite for the past decade. Tracy specializes in helping clients to identify areas to reduce their cyber risk and get the most value from their investments in solutions. A fun fact, she met Bill Gates at a Macworld conference and expo when he crashed Apple's event. Tracy, thank you for joining me, and I look forward to your helpful insights on security in the financial services sector.
Thanks, Bucky. Great
Absolutely.
to be here.
Yes, great. Thanks for coming. So, Tracy, in preparing for this webinar, I know that we both felt it was necessary to look at the history of security in this industry, as well as the current state and future trends. So, let's start with a short glance at the past. What issues have banks and credit unions been dealing with in the last few years, and how have they, or should they have, been addressing those issues?
Well, let's start with a look in the not too distant past, and that would be this Identity Theft and Research Center breach report. This report just came out, and it's showing a comparison for the first 6 months of 2020 to the first 6 months of 2021. And we highlighted here the financial sector stats, where you can see that the first 6 months of 2020, there were 70 reported compromises. And this is important to remember that not every compromise gets reported. We'll get into a little bit more of that on the next slide. But out of those 70 reported compromises, there were almost 1.5 million individuals impacted. Now, so far in 2021, for the first 6 months, 132 compromises, but look at the number of impacted individuals. Were just over 9.5 million. So we can see that breaches are up over all sectors almost 40%, but in the financial sector, it's an even bigger jump. And part of the reason for that, this source is the IBM Ponemon Report. This is for 2020. They haven't released one for 2021 yet, showing the average number of days to detect a breach by industry. Now, I know when this report came out last year, I personally was a little surprised by some of the sectors, including the financial services sector, because there are so many compliance requirements around monitoring for threats. But again, financial sector at 163 days, that's a really long time to detect a potential incident. And the longer it goes undetected, the more damage that can be done. As you can see, there are other industries that are worse, including healthcare at well over 250 days. So financial sector isn't the worst off, but definitely shows that there's some improvement needed. And so some of the incidents that we've seen that Some of it's made the news, some of them haven't, but we wanted to talk about some of these recent concerns, right, Bucky, that we've seen without naming names, of course, and how you deal with them.
That's correct, yes.
So, yeah, and it's hard, as we discussed, to confirm all the details on bank and credit union attacks because they go to great lengths to keep them quiet. Security firms like Foresite, we are under strict non-disclosure to discuss any services that we provide in a specific customer way. But of course, some attacks do make the news and become public knowledge. So these we can talk about. And with the banking service providers, Finastra was forced offline by hackers in 2020, disrupted 2 banks worldwide. Another well-known service provider incident was around the Excellion file transfer service. Excellion file transfers was used by a lot of Fortune 500s, including in the financial industry. And their legacy platform, as they called it, they weren't really doing a lot of updates to it and keeping it up to date with security, but they weren't forcing people to upgrade either. So many, many businesses were still on it. And hackers found a backdoor into it and exploited it and gained access to those customers. Morgan Stanley and the Reserve Bank of New Zealand were both confirmed as owners of exposed data. Now, the other thing that's interesting about that is that Excellion did not immediately report being hacked, and the initial security patches that they did try and push out to prevent the spread of the malware didn't work. So those two things combined led to increased exposure, right? Because the longer that the banks and the credit unions didn't know that there was an issue, and even if they were pushing their patches as they should have on a regular basis, they weren't working. So the hackers were in there all that time. Data leaks is another issue that Ally Bank just reported. They had a data leak about 2 months ago of consumer names and passwords. And according to the report, the leak actually occurred through an outside marketing firm. So they contracted with a firm to process this data on their customers. The firm had a server that was not secured, and it was accessed by hackers. To date, they haven't named who the marketing firm was or who the data was exposed to, if it was a specific hacking group or if it was just out on the dark web. But this is really, really common because there's a misconception that data that you put in the cloud, whether you set up your own cloud server or you're working with another company like a marketing group, there's a misconception that you put that data in the cloud, that it's automatically secured properly, and that if it's not, that ultimately you might not be responsible for that, right? Because you've outsourced this or you've given access to this marketing firm, so now it's their responsibility. Unfortunately, that's not the case. There are many, many improperly secured cloud servers. It's an ongoing issue. It doesn't get detected usually until the data shows up for sale on the dark web, but the results can be the fines and penalties and class action lawsuits, specifically going after whoever the data was collected by. So if you're a bank, credit union, whether it's your own server that you've got out there or you're sharing this with a marketing firm so that they can help you with your efforts to grow your business, if you have asked for the data and provided it to these outside parties or put it up in the cloud, you are still ultimately responsible. It gets tied back to you just like it did with Ally Bank. They had to do the notifications, they have the reputational damage, and they would also be responsible to pay for forensics to figure out where the data went, investigations, and any remediation that needed to be done from there.
And Tracy, I noticed that you did put in to your presentation that if not implemented appropriately. So you're not suggesting that banks and credit unions throw out the baby with the bathwater and not look at cloud servers as a potential use for their HR softwares or their dashboard softwares, or possibly even their core provider softwares. It's just that they must implement that appropriately and understand that there are additional risks that they have to address, but they can be addressed, correct? So we're not throwing out cloud servers altogether. We're just saying they have to be done properly.
That's exactly right, because cloud servers can be far more secure when you think about the capabilities. Let's say you're a small credit union and you think about the capabilities and the budget that you have for security versus Amazon Web Services, for example. It's much more efficient and cost effective for them to put multiple layers of protection on a cloud server than it is for you individually to put all this around your physical environment within your four walls, because you're still going to have to allow access in and out through your network in order for the data to be used. The important thing is when you're working with a third-party provider, you need to ask questions around their security. They should be able to show you attestations about their security practices. So things like a SOC 2 report or the fact that they're meeting the ISO standard, different recognized technology standards. And if you're spinning up your own cloud server, you don't want to just put that server up out in the cloud and assume that means it's secure. There's various levels of security controls that you can implement with AWS, again, as an example, or Azure, whoever that provider is. And so you want to make sure that whoever is setting that up for you understands those controls. And just as important, the compliance requirements that banks and credit unions need to follow. So an outside review to make sure that implementation is done properly is a very, very smart investment to make.
Great. And so the cloud server sits on one end. If you're moving data to it, you've got your data perhaps inside, but is there also a risk involved with the movement of that data through the network from one source to another?
Not if it's done properly. There really shouldn't be. That traffic should be encrypted all the way through. So it's really, cloud is very, very secure as long as it's implemented properly. And the risk typically goes down when the data goes outside of somebody's four walls, again, as long as it's set up properly.
That's great to know, because I know in talking with some bankers, they're a little bit nervous still about looking to the cloud for some of their critical data. I believe many banks have outsourced some of their ancillary software, as I mentioned, HR software, and maybe some dashboard types of software where they can distribute reports. But that core data is oftentimes the place that banks seem to be most resistant. So hopefully, through listening to what we're talking about, they may feel more comfortable exploring those options. So thank you.
Right. Yeah, the important thing to remember when the data is all physical is you need to have at least encrypted copies somewhere else. Because if something happens to the physical location, then having it just in that one place could put you out of business, especially if the data was destroyed, for example, in a fire. So most of the time, they're going to have some type of copy, whether it's on removable media or a cloud backup. And so really, there's very little difference in a secured cloud backup versus a secured hosted server that's in the cloud. You just need to take the same precautions for both.
Great point.
Now, there are also vulnerable technologies, and this is a real struggle for any organization because, of course, you're going to be using hardware and software solutions that you don't build yourself. And you have expectations, especially when there's security solutions, that they're going to be properly secured and that any time a vulnerability is discovered, that there's going to be a patch and it's going to be addressed properly by the manufacturer, and ideally that there'll be notifications to you to make sure that you apply the patch. Now, usually that's what happens. Unfortunately, it's not always what happens. And so SolarWinds is the most recent example of that. They had a backdoor in their network that was left open for about 7 months. And what that allowed was the hackers had plenty of time to get in there. They modified the code. So they actually went in and modified the code of an upcoming update. and they put malware in there so that when the update was pushed out by SolarWinds to all of their customers that were following best practice for patching applied those patches, and they actually installed malware that could go in and create access for the hackers so that they could put in spyware. They could put in code that could take copies of the data and send it back to them. And this malware was downloaded by over 18,000 customers worldwide. Now, those customers included banks. The known victims were Denmark Central Bank. They were among one of the identified victims of the compromise. Many people have not disclosed if they were involved in this or not. And so when you don't have immediate notification of a vulnerability, sometimes patching isn't done on a regular basis. How do you know? Did I get that patch? Did I not get that patch? How do I know, did this malware get into my system? And if it did, has it actually been used to do anything malicious, like modifying data or deleting data or stealing copies of data? And so when something like this comes out and you have technology that's affected, the prudent thing to do is to go through a forensics investigation to figure out if you have the indicators of compromise in your own systems and if there's any indication that data did go out and a breach must be reported. Now, the danger of not taking those steps is that a lot of the commercial insurance policies written for cyber are going to say that from the time you're notified of a potential issue or made aware of a potential issue, you have a certain period of time in order to make a claim. And if you don't make a claim during that period of time, then you have no future claim. So in this scenario, if you didn't investigate to see if the SolarWinds or whatever the vulnerability was, it could have been the Sonic Wall vulnerability, or if you have an outside IT provider, it could have been the Kaseya remote monitoring and management tool vulnerability. But any of these technical vulnerabilities, if you have that technology and you don't verify whether or not you were affected, and then say 6 months down the road, something happens where you clearly see that you've been breached and it goes back to that vulnerability from 6 months ago, your commercial insurer could make the argument that you did not take prudent action to investigate the potential breach and then refuse to pay your millions of dollars worth of claims. So there's no way that you can completely be exempt from vulnerable technologies, because again, you don't control the code for all of these different systems that you use. But what you do need to make sure you're aware of is anytime there's a potential because you're using the technology, you need to make sure you take prudent steps to verify whether or not data was exposed.
Yeah, and I think your point there resonates with a point on the previous slide as well, which is reputational risk. You know, certainly if you have any type of intrusion or any type of exposure, you may feel like initially as a bank, I want to try to handle this on my own without informing my customers. But then if that delay could actually exacerbate your customers' reactions to you having that vulnerability. So I don't know if the advice necessarily is to tell someone day one, tell all of your customers day one it happened, but be aware that customers are sensitive not only to the fact that you might have been hacked, but that you didn't communicate or you didn't deal with it in a timely manner. So not only do you have issues around your insurers, it sounds like there's also that reputational risk that you pointed out previously.
Yeah, 100%. And certainly for financial organizations, I don't want my bank calling me on day one if they don't know if my data's been exposed or not. My expectation is that they're going to investigate any potential of that. And then once they do know, then they're going to notify me right away. So I think that's the reasonable expectation, that you're going to investigate first, make sure you know, was there a compromise that actually happened or not, because you had that technology and potentially had that malware get into your system. But take another recent example with the Kaseya incident, where all these IT providers have access into their customers' networks, including credit unions and banks. And when that exploit happened, the code starts to spread, but it does take some time. And once the code gets into the network, then the hackers have some steps they have to do to execute it. So the quicker the notification happened in that case, a lot of those servers were able to be shut down until a patch came out to stop it, and then the patch was applied. So meanwhile, those customers were not exploited. They didn't need to notify their clients. So it's just making sure the steps happen in the right order. You don't want to raise an alarm before you know for sure what happened. But if you do find out that client data was exposed 100%, you want to be upfront, you want to let them know, and you want to take the proper steps of providing credit monitoring or whatever's necessary to protect them.
Exactly. Well, I know we've kind of been looking at the past, and I appreciate you recapping kind of previous and ongoing, because just because we've identified what issues have happened in the past doesn't mean they've stopped. They are ongoing security concerns for our listeners. But what are a few of the more recent concerns that you've seen in the industry, and maybe advice on how you would recommend dealing with those?
Sure. So, well, one issue is cyber claims, like we're talking about. The cyber insurance industry simply did not understand the level of risk and how to quantify that risk. And when you think about how new really cyber insurance is, they didn't have a lot of history to look back on to know how to price it and what maybe they should be looking for when they were taking clients on, any protections those clients should have in place to prevent cyber attacks. And so because what I'm hearing from that industry, we work with a lot of insurers when we're doing forensics and so forth. And what I hear from my contacts is for every dollar they're taking in cyber premiums, they're paying out about $3 in cyber claims so far in 2021. So it's important to understand that claims can be rejected depending on wording in the policy if you don't follow the proper steps, and not only the proper steps for addressing an attack, but the proper steps what's reasonable to protect data, right? Because you are still responsible to protect it. They're not your incident response plan. They're not your cybersecurity framework. They're just there to provide some financial remedy if, despite all best efforts, you still have a claim. And these outside attacks are causing the most expensive losses because they typically are hackers that are looking to monetize your data, and they're putting it out for sale on the dark web. And so they're looking for the most data that they can access, where we used to see sometimes more internal, and it was often accidental. So things like you were talking about having that local server instead of having the data in the cloud. You have employees who have access to that local server. Somebody deletes a file accidentally or causes some type of file corruption accidentally, and data could be lost, but it wasn't exposed. So you might have had to go back to your backup source. You might have had to restore data. You might have had some internal disruption and cost. But these external attacks that expose data leave you open to regulatory fines, legal judgments, notification costs, etc. Business interruption, just thinking about what the cost is if you have to take your servers down, or if you've got those local servers and you have to restore from a backup. You should do test restores on sample sets of data to get a true understanding of what amount of downtime that's going to be. There's been some very public cases, more with municipalities, where it took them a week, 2 weeks to restore their data. Now, if you're the town of Orange County, California, or Atlanta, Georgia, or whatever municipality you are, business interruption is disruptive, but it's not costing them money, right? Because their taxpayers aren't probably going to get up and move, at least not right away. Whereas a financial institution, that kind of disruption can actually cause loss of clients, prospective clients choosing another provider because there wasn't access, that reputational damage. So you need to think about all those things. Remote working, of course, this started almost 2 years ago, I think now. And because of the sudden need to have remote access, there's a lot of exposure because those access setups had to be done very quickly. So if you were a bank and you didn't have anybody that worked remotely before, and all of a sudden you had to quickly have some remote access because people couldn't physically come to your location, or you had to expand services for your customers who couldn't come physically into your location, was the proper security review done? Did that implementation take into consideration your compliance requirements? In a lot of cases, the answer was no. Did it have to happen quickly? But nobody expected that a year and a half, 2 years later, that we might still be under some restrictions, or that a new variant might be coming out and we might be in the same boat in another 6 months. So these are all things that we need to be thinking about moving forward. Ransomware incidents. It used to be if you got ransomware on your system and you had good backups, you could restore from your backups and move on with your business. You didn't have to pay any attention to it. But because, as I said, those attacks have evolved, and now what they want to do is they've realized to truly monetize that data, they want to take a copy of it. So they will go to you and say, hey, unless you pay us $500,000, we're going to release all of this information about your customers and their finances publicly. And there's nothing to say that even if you're willing to meet their extortion demand, that they won't still eventually put that data up for sale on the dark web, because the hacker's motivation is to get as much money out of this data as they possibly can. Some of them, they make a business out of it, and if they get paid the extortion payment, they want word to spread that if you do business with them, that they won't just release your data, but at least that's in the immediate time frame, right? Who's to say a year from now that they won't feel like they can go ahead and release the data? So these things are much more damaging than just simply having to pay a ransom demand or be able to ignore it if you had a good backup. Business email compromise is a little bit different twist because it's not relying on a ransomware or malware payload. What they're doing there is they're getting enough information to be able to convincingly craft an email and get people to transfer funds. So I know a case that I can't name names, but I can talk about was a group of private schools where I'm based in Connecticut. A very convincing business compromise email was crafted. They all belonged to an association of sorts. And this email was crafted about an investment opportunity that was something that was very convincing. They had a lot of information. They had done their research, and 8 of the 10 schools that were in that group wired millions of dollars, thinking that they were dealing with the financial institution that handled their investments as a group. 2 of them figured out they didn't quite believe it, and they did validation by making a phone call and found out that it wasn't true. And by the time that warning went out, it was too late for the other 8, because once that account fund is transferred, as quickly as possible, they'll get it out of the country. And you probably know well better than I do, folks that are listening to this, how difficult to impossible it can be to claw back any funds once they leave the country. Barbara Corcoran of Shark Tank, her financial controller was tricked into paying a $400,000 invoice that she thought was for renovations on a property in Europe. But she was lucky enough that when her controller responded back to the hackers, she added in Barbara's assistant on copy on the email. Barbara's assistant got suspicious and asked Barbara, and their bank was able to freeze the funds and claw them back. They didn't end up getting transferred to China. So she was very fortunate. She could have lost $400,000 in one business email compromise. And most of the time, again, that's not going to be covered by insurance.
That's right. And it is tough to get a wire back, especially if it's international. So
yeah, exactly. And then when you're dealing with things like Bitcoin and all these other currencies, cryptocurrencies, forget it. You know, it's gone. You don't know who you're actually paying it to, and they can't get it back. And that's why for ransom and so forth, that's what they're going to require. Now, also, the cost of these mega data breaches is increasing. And again, it goes back to the more data they get a hold of. So if they're simply getting a hold of a database out of a website, it's not good, but the bigger that database is, not only is it going to cost for notification costs and potential fines and potential legal judgments, but even the investigation costs. If we have to go through the logs of 30 different servers or a very large database versus a smaller database, the more you can segment things to protect a spread, the more you can control the cost. And also the quicker you detect, right? We go back to, if they're in there for 6 months and they're moving all through your network, then the cost of investigating that, putting the right controls in place after the fact is going to be larger than if you're detecting something suspicious quickly and either can prevent it or at least stop it before it spreads through the entire network. And then regulatory exposure. And when we say it's increasing around the globe, because we're a global economy now, regulations like the General Data Protection Requirements, GDPR, for citizens of EU, that doesn't just apply over there, right? That's going to apply if you're gathering that information on citizens of EU, even if you're in the US. And a number of US companies have already been fined, and they take a percentage of gross revenue for the fine. So those fines can be in millions and millions of dollars. But also, even here in the States, in addition to your financial sector compliance requirements, now you have data privacy requirements in almost every US state. And so that's looking at things like personally identifiable information. So what seems like innocuous marketing, you just want my name and my email if I come to the website to check on your checking account fees or the different credit cards I might be able to get. You just want to know that I was there and what I was looking at. You're not asking for my credit card. You're not asking for my social security number. But the problem is when you gather that data, there's an expectation that you're also going to protect it. So the Federal Trade Commission has issued fines around that failure to take reasonable protection. So the regulatory exposure is just getting larger and larger, and you need to understand all of those requirements and make sure you're addressing them.
This concludes part 1 of the Windstream Enterprise Financial Services Sector Security webinar. In this first episode, Tracy Fox has covered historical and ongoing security concerns, as well as beginning to discuss current trends in financial services security. In part 2, Tracy and I will further discuss current trends and look to the future with developing security threats and changes in the regulatory landscape. Thank you for watching, and I know you will want to tune in for part 2.